Good morning. Today I want to talk all about financing, mortgages, and in particular, how that applies to today's buyers. So my name's Alan Rich. I'm the managing broker here at Maximum One Realtor and Realtor Partners. And I'm going to kind of jump in and start talking about what's happening with mortgages and also how that pertains to all of our buyers right now. So as far as like where we stand mortgage rates right now, uh, you know, we are currently sitting in the mid to high sixes at the current moment. We've seen a lot of volatility when it comes to the mortgage market, especially over the past year. That's kind of the par for the course right now. See, markets or mortgages react to the market, and the market right now is kind of a little bit. It's kind of all over the place. So we just had the Fed's meet last week. They decided not to raise the federal funds rate or lower it, either one. And so it stayed steady again, despite the current administration wanting to see that lowered, and we would like to see it lowered. But please understand that mortgage rates are more than just the federal funds rate. Yes, the federal funds rate will affect mortgage rates, but there's not a direct correlation. The direct correlation for mortgages, especially if you look at the 30-year fixed mortgage rate, that follows the 10-year treasury. And so T-bills, 10-year treasury, if you were to put the 10-year treasury and you were to put the 30-year mortgage rates, you'd see that there is a natural, when one goes up, the other goes, or when not one, it doesn't work the other way around. But whenever the 10-year treasury moves, so moves 30-year mortgage rates. Now, what affects that? Yeah, the federal funds rate is definitely going to be one of those things that does affect it, but it's not the end all be all. Like current turmoil that we have in our marketplace is definitely affecting, how Wall Street is reacting to different things. Our current administration, their fiscal policy, how that's going on, it is heavily influenced by inflation. Now, the good news is that we've been seeing inflation move in the right direction. Now, a lot of times when you ask Americans about inflation, they are pretty pessimistic about it. But inflation now is actually, it's like 2.2, 2.3%. It's not below the 2% mark, but it's moving back towards there. The challenge is that's how much things have inflated over the past year. And most of the time people remember more than just the past year. They remember the last 4 or 5 years kind of thing. And they think back, back when prices were yada, yada, yada. So that's definitely going to impact our market. The dollar being downgraded, those kind of things. All these things are things that will impact our market. Now, the good news is moving forward, especially if you talk to a lot of the big brains in the mortgage industry, that kind of stuff. We're going to be moving throughout the course of the year much lower. When I say much, into the lower sixes is where I really kind of see it being for the rest of the year. And so, but it's not going to be like a steady progression like this. It's going to look more like this, which is just kind of how it's going to be. So the reason I wanted to have that conversation about mortgage rates is because what we're seeing, or some current data that's come out right now as well. And so one key point that I want to bring up, and let me start off by saying this is not to shame anybody by any means. However, these are some stats and figures that I do want to share with you. And so there's a recent report where they released the National Association of Realtors. They put out what is the home ownership average price point versus education level. And so, like, if you look at overall folks with less than a high school degree, their median property value is around $228,000. Now, those with a high school diploma, their median property value is $245,000. Those with some college, meaning that they attended, they may not have graduated, but they attended, that's going to be about $305,000. For those that have completed a bachelor's degree, their median property value is 408, and those with a master's or a doctorate degree, their median property value is 474. Now, I'm not getting into the debate, and I'm not trying to throw any kind of shade or anything like that at anyone or shame anybody. These are just kind of stats and figures. I'm not saying that you have to go to college to be successful. That's not what I'm saying at all. I'm saying that overall, these are the education levels and these are the median property values for those homeowners. The reason I'm bringing that up is here in the Atlanta area. We've got about half of our folks that have less than high school degree, right? We have around 62% that do have their that have the high school degree or greater, that kind of stuff. In our area, education is, and I'm not, again, this is not about shaming, doing anything like that. The whole reason for me bringing this up is because at the same time, there's another interesting study which says that buyers are more likely to turn to agents with financing questions. See, our buyers have a lot of questions about finance and they don't know who to turn to. Now, the challenge for us is that in a lot of cases, we don't want to be outside of our lane. We want to stay right where we need to be. We want to focus on real estate. And I completely agree. I want you to stay focused on real estate. I want you to really focus on honing your skills there. That being said, are the buyers turning to us for financing questions? Yes or yes? And the answer, of course, is yes. They are turning to us first and foremost. I'm not saying that there isn't a small percentage that starts off with a lender. I'm saying that overall, you're going to see that agents get far more financing questions in the early days than a lender does. And so I find that to be interesting on one hand, but the other thing is when you look at, we have a populace that may not have the education levels that they need. And we know that the better educated a consumer is, the better off that they're going to be. So we as real estate professionals have to make sure that we are knowledgeable and able to explain some basic financing questions, kind of thing. So in this poll, they went out and said, hey, where do you get the vast majority of your financing questions for buyers? And almost 60% said that it's the agent. After that, they go to a financial institution, bank or credit union. But I find that one really hard because a lot of people are not comfortable just walking in and don't know a banker back in those days, kind of thing. I mean, back in the day, people used to know their bankers, but now not a lot of people do. The one where a lot of people are getting a lot of information is on the website. On website search engines, that kind of stuff. And we all know that if it's on the internet, it has to be true. So I'm a little bit skeptical about that. And then afterwards is friend, relative, colleague. And I'm not saying anything bad about that, but sometimes we're just, depends on how knowledgeable that friend, relative, or colleague really is. So all that being said, we have to come in and be prepared to answer financing questions first and foremost as real estate professionals, right? And so that is a very challenging place for us to be. Because on one hand, yes, I want you to stay in your lane. On the other, they're going to come to you and you have to be knowledgeable. So doing things like do you need to go out and take all the mortgage 101 classes, those kind of things. You have to understand the difference between conventional, FHA, VA, USDA, down payment requirements. And probably one of the biggest aspects that we have to be very knowledgeable is how down payment assistance, how much money they have to work with, those kind of things. Now, please understand, I'm not saying that we should be directing anybody into a mortgage program. That is not our job. However, they are going to come to us with those kind of questions. So having a reputable lending partner that you are tight with, that is your go-to, is a like the must have. For us, it's definitely Sharon Thompson. We go to her immediately for any and all needs that we have. And for us, that's a very comfortable, safe place to be. You as a real estate professional have to have someone like that that's going to be there in part to educate you, keep you abreast of what's happening with rates, what's going on in the mortgage industry, those kind of stuff. But even more so, someone who's going to be responsive to your clients and really be there to help them out. We're not trying to replace a lender, and I don't want you trying to do the lender's job. We should not be saying, "Oh, well, you need an FHA loan, or you need this." Like, oh, you're definitely, is a VA loan the right choice for you? Possibly, it could be, but you have to understand what those work out, right? And so when asking the prospective buyers, like what are your biggest questions? And so the first one is understanding all the costs associated with a mortgage and a home payment. And so that comes down to pity, principal, interest, taxes, and insurance. Because out there, unfortunately, especially if they're pulling information off the web, off the internet, there are a lot of folks that will only display principal and interest when talking about properties. And then there's this bait and switch game going on. So please make sure that we talk about principal, interest, taxes, and insurance. And right now, insurance is a big deal. So we have to make sure. But again, would you call that mortgage questions, or would you call that more financing questions? See, these are financing questions. The next one is understanding how much I can afford. And this comes down to having a conversation with your buyer, because sometimes we have, our needs and our wants and our price don't always match up. And so, you know, I think we've all had those buyers who was like, I want the 5-bedroom, 4-bathroom home on the lake for $100,000. Well, I'd like that too, but it's not reality. So we have to get within reality. That doesn't necessarily just mean we're gonna price our buyer out of it, but maybe we drive until they qualify. Maybe they change some of their other needs or wants, those kind of things. But again, not what I would call huge mortgage questions. Now, the third most common one is researching mortgages and rates. And here's where you need to have a general information about mortgages, how they work, understanding the differences between a VA versus an FHA. VA, doesn't have mortgage insurance, those kind of things. Understanding how the complexities are. This is much more general knowledge, just overall knowing about mortgages. Now, when it comes to mortgage rates, you need to be able to have a general idea, but don't ever quote rates ever, okay? Because when you quote rates, that's talking about an average, and you don't know what the credit score is or the credit worthiness of your particular buyer may be. Some like some folks will have an 820. Some folks will be scraping by with a 520, and so mortgage rates are going to vary differently. So you can throw out a range of what you see, like right now, overall, right this minute, we're at a 6.81, but that's from Fannie Mac or Freddie Mac, and that's just the overall average. It could be lower, it could be higher. We see a lot of our buyers are coming in mid sixes, but that's just kind of an average. And so, be very careful when you are throwing out market rates and those kind of things, that you're educating them on really what's that look like. The next big question that your borrowers are going to have is, how do I improve my credit score? And so go get educated on this too. Like, number one, pay every bill you have on time. Don't be late. Don't spend more than you earn. Start saving for a down payment. Have a savings account. These, like a lot of times when folks say I need to improve my credit score, it's where they've made mistakes on things. And I get it. I'm not trying to, be mean or uncomfortable with it. But the bottom line is, there isn't this magic pill. You've got to work through these things and address some of these issues head on, because sometimes they're like, hey, that program out there for people with crappy credit? No, it's not there, right? You got to get your credit straight. And so paying your bills on time, having some reserves, being consistent with it, those kind of things. It's just about smart. Now, your lenders can also be a great source of this information. So rely on them also. Probably the last real important question is, what does the pre-approval process look like? This is really important that we discuss this with our buyers, because sometimes our buyers, like this is a world right now where we have a lot of scams going on. And are the lenders going to require to verify employment? Are they going to require 2 years of tax returns? They're going to ask for some very personal information from your buyer. Sometimes buyers are like, what? I don't think that I should have to give them that. Look, if you were loaning somebody $300,000, would you check them out too? You sure would. So if you'll prepare your buyers that they are going to have to prepare, and they're going to have to give these documents over. There's, like there was a point in our industry where we had like stated income, and people could just, well, this is how much I make, and don't check. And that's not our market. That's not what's going on right now. Right now, that you got to make sure you got your duckies in a row, and the lenders are going to do that. They're going to verify employment up to the day of closing. They're going to check to make sure that these are real bank statements. But if you will educate your buyers on that, it won't come as a shock to them. As far as like what are the necessary documents that they need, those kind of things. It's all really, really important that we educate them. And so, just to kind of wrap up, that's really the big deal. Be knowledgeable about the mortgage process, educate your clients. You're going to have much more prepared buyers who are prepared to jump into the market, understand what's really going on. And it is really so important that we're doing that for our buyers right now. The average net worth for a renter is somewhere around $10,000 a year. I'm sorry, $10,000 total. The average net worth for a homeowner is almost 400,000. So we're talking about life-changing differences in wealth. So it's important that we educate our people, and it's our job to do it. Have a great day.